A very good evening. So students, we are back again, and I think this was the last chapter which all of us are doing, and I think it may be the last class for costing with me for this particular batch. So let's make the most of it today. And the topic today is actually very, very simple. From the examination point of view, there are only two aspects which we cover up as far as this topic is concerned. Mostly in question number 1, we may ask you about activity ratio or capacity ratio. That's the kind of question which comes. Or we may ask you in any other question with the theory part, right? And as the name suggests, the name of the topic is budgetary and budgetary control. I'll be using the text from the first instance because today is the class which we have for this particular topic. And as I said, we don't have much to talk about except telling you about certain things, right, which you need to know. So first, I will be briefing you about what you should know about budgeting, and then we can turn on the text material. So a very good morning, good evening to all of you. It is so good to see all of you back. And yes, I am much better today. Cold is 90% gone. So let's talk about budget and budgetary control. So what do I mean by budget and budgetary control? See, when you say budget, what is it? It is nothing but on a piece of paper, or you can say this is like laying down a plan, laying down your plan in a quantitative manner so that you are able to justify or compare your actions when you actually perform. Are you getting what I'm trying to say? It's like budgeting is nothing but planning. So for the purpose of planning, you need to put in things in figures in a quantitative manner, right? When you're putting all those things on a piece of paper, you are having a mindset that, okay, this is what I want to do. This is what it's going to take me. You are doing nothing but your budgeting. So it is basically in a quantitative manner, a systematic manner. When you lay down your plan on a piece of paper, you say you are budgeting, right? Now, the process of budgeting, actually, some people say that budget, you need to know the different kinds of budget and all that. See, for me, if I have to study this topic, budget and budgetary control, look at the name of the topic itself. Just talking about budget and budgetary control. Why is the name budget and budgetary control? Because see, first you need to make a plan. Okay, you need to budget, right? Now, for the purpose of budgeting, you need to understand your activities. So you can start budgeting on the basis of functions. Like for any manufacturing concern, what will be the starting point? See, if you want to be a chartered accountant, you need to have a little bit of common sense. And I should not say little bit, I should say you should have lots of common sense. A lot of students memorize, learn, and they keep on doing a lot of things. In fact, on the other hand, if you go a little systematic, you realize, yeah, all this is very simple, I know it. Right? As I said, if I'm a manufacturing organization and if I have to start planning, where do I start planning from? Logically thinking. Can I start my plan from how much to produce? No. How much to produce will depend upon how much will I be able to sell. Right? So technically speaking, the budgeting process will start, if I go function-wise, will start from the sales team, which needs to tell that, okay, how much we will be able to sell in the market. Once the sales team tells us that what are their plans, the production team would decide that, okay, if sales team wants to sell this, we need to produce this. The moment production team comes out with its plan, obviously the purchase team, the labor team, the expenses team, everybody can lay down their plans. That means if I go function wise, I need to begin from the sales. And then accordingly, everything starts falling in place. As I said, this is nothing but a plan, right? Then now this is going by functions or going by technically, operationally, that, okay, what is it that you need to produce and how much to produce or whatever. Similarly, you can have a cash budget, right? All of us know cash budget is so important, that how much cash we need to keep with ourselves. In FM, all of you have studied that, because extra cash, keeping extra cash or idle cash actually fetches you no money, right? And keeping lesser cash is also a problem. So we would always try that we keep as much as cash, which will take care of my transaction and preventive and speculative motive. And if at all I'm left at the end of the month with a larger amount of balance, I should be able to invest it into some kind of liquid or marketable security, so that as and when if I need, I can take the money out. And if at all I am in shortage of the funds, I can always ask for the bank for some kind of a loan, so that I'm able to always keep an appropriate cash balance. Now, how much cash balance I should maintain is taught to you in the FNP. Similarly, I can make a master budget, wherein it's like, okay, where do I foresee myself? What should be the expenses? What is the expenditure? And so that will be like a master budget, okay, the master plan. So that's what budgeting is all about. And once you have budgeted and you have put in your plans at one piece of paper, you can, when you actually do things, you can actually compare and see that how much you have been able to conform to the budget plans which you made. Now, obviously, the technique of budgeting can be a top-down approach, or it can be a bottom-down approach, or it can be participative, right? You can follow any approach, but every approach which you follow will have its own plus and minuses. Like, for example, if you start from top down approach means the people at the top, or the strategic people, will ask for the goals and the missions of the organization. They will decide that, okay, this is what we want to do, and then it will percolate down and everybody needs to follow. The only problem here could be the first people can feel, oh, we were not even consulted, the bosses have just told us the budget and we just need to follow it. So it may appear out to be very authoritative, but it could be more simpler, because the people at the top definitely know where they want to steer the organization to, and we can have a more budget which is more conforming to the requirements of the organization. We can have a bottom-up approach wherein we start from the operational level. Or third could be, we could pick up people from all departments and have a participative methodology for making up a budget. Sometimes the budget which you make is actually is negated because the conditions have changed. Like let's take up the example of zero base, COVID times. Now, everything which we were doing earlier, nothing stands the way it used to be, right? So you say, no, we will redo things. We'll start from scratch. We'll start from zero, and we will look into the conditions and redefine the things. Zero-based budgeting. Flexible budgeting. Flexible budgeting is like at each level of operation, you say, okay, if I'm able to perform at 60%, then how does things, happen? What will be the expenses? Which are fixed in nature? What are variable in nature? What is going to be the change? So from 60, if I move up to 70, 70 to 80, flexible budget. Right? Rolling budgets could be when you say, okay, I make for this quarter. Looking at that quarter, you realize, okay, these are the changes which happen. You incorporate those changes, and for the next quarter, you make another budget, keeping into mind the changes which happened in the first budget, in the first quarter. So, at the end, what I'm trying to tell you is budgeting is nothing but a plan, a detailed plan, right? That's it. So, a very good evening to all my lovely students. And Sushil, my voice is not clearly audible. Please tell me again if my voice is not audible. Please let me know, because my volume of my laptop is at 100%. Good evening. Your health is all right. I am much better, Durgesh. And so good to meet all of you. Right, today's the last lecture, and after that, I should only get messages that you have all passed the CA examination. Right? So, don't you want to meet me at CA final level, or after becoming chartered accountants, meet me as CAs? Right? Okay. So, this is what this chapter actually has to do, right? As to what is budget and budgetary control. I would like to directly start up with the ICAI material, because there is very less of things which I need to tell you about. As I said, theoretical and sirf thode se practical question. Okay. Thank you for missing me, guys. Nice to hear that you people missed me. Right. Next time I'll try to take more of your sessions. Okay. With the next batch. Okay. So look at what ICAI says. What is the objective of a budget? What do you mean by zero-based budgeting? What do you mean by performance budgeting? Now let me be very clear. As far as exam is concerned, this is what ICAI is interested in. Budget ratios, capacity ratios, calendar ratios, efficiency ratios, right? Right. Okay. Now, okay, thank you, Sushi. So they have defined that budget is a financial or a quantitative plan of a business enterprise to be pursued over a period of time. Everyone take this. All of you take this, because if I ask you and you have to define budget in an examination, what is the definition you write? Please do not refer to any notes. Do not refer to any coaching classes, kachra material, and collect one more set of notes with you. ICAI material is more than enough at intermediate level. Nothing more than this is going to be asked from you in the examination. Of course, the questions will be twisted. It's a professional exam. If your fundamentals are clear, you will be able to handle the questions. Yes? Right. A financial quantitative plan of business enterprise to be pursued over a period of time. This is the definition. So it's a process of designing, implementing, and operating the budget, right? So Charu, ma'am, how will we tell you that we have cleared? Okay, Charu. Okay, you can always request for my phone number and you will get it, right? You can always tell me, right, that you have passed. You can email that you have cleared and ask ICAI to inform me, right? I will be informed that you have cleared the exam, right? Now, so what is budgeting? It's a process. Budget is a plan and budgeting is a process wherein you design, implement, and operate the budget. So it's a means of coordinating the combined intelligence of entire organization into a plan of action based on the past performance and governed by rational judgment of factors that will influence the course of business in the future. Guys, itni sari jo in log ne English likhi hui hai, the English which ICAI has written, please try to understand. You can write it in your words. It says you need to combine all the functions in an organization, or you can say you have to combine the whole organization. Make a plan of action. How will you make a plan of action? You tell me. How do you people make a plan of action? Okay, you say, okay, what is your goal? All of you tell me, what is your goal? The goal of all of you here is to clear CA. Right? Now, for doing that CA, that's your goal. So think an organization has a mission or an objective. So the objective of the organization is, let's say, to make a profit of XYZ amount. Now, instead of organization, I'm putting you guys. Your aim is to become a chartered accountant. That's your objective. So what is the plan which you make? Now, for the purpose of making a plan, people have actually seen how you people have performed in the past. Because how can you plan for future without knowing about how you people do in the past? Now, in the past, say you have never given an CA exam. So what do? You look into the past year papers, you see your own self, that okay, how is my capability in handling a question, doing things. With that, you decided that okay, how many days I need to give on a subject or prepare for a subject, keeping into mind your own capabilities. And with that, you allocate days, and you'll be studying, and you'll be deciding your plan of action. Today, at the end of the session, I'll be giving you 10 minutes how you should plan your studies for your CA intermediate examination for all papers. Follow that. Trust me, you'll pass. So you look at the past and then decide upon your future course of action. You say, oh, I have already done costing so much. These many questions are done. Okay, so on the basis of past, okay, this much I was able to do. You decide that, okay, I will need another 1 week or 10 days to complete. Similarly, for accounts, you say, oh, my almost like 90% things are over. And I managed to do this in 30 days. Okay, so in next so many days I'll be. So you are actually planning on the basis of past. You design your future and everything. You cannot be a very overbearing kind of a person. You need to be rational. You need to understand that how your performance is and how will you perform, how much time do you need, and everything has to be on a rational basis, right? You can't think or you can't decide your own budget on the basis of some friend who manages to do things in 2 hours, and if you're able to do it in half an hour, you can't have a budget as per or the number of days allocated on the basis of that gentleman. Are you getting my point? That's what I'm trying to say. So obviously, essentials of a budget, no need to learn it. You can also write 5 points. It is for a definite period. Obviously, I can't decide for my whole life, right? I can only make plans for like 1 year or 2 years. So obviously, budget is for a definite period. It has to be a written document. You have to coordinate all the activities of a business. You have to keep on updating, correcting, and controlling yourself. Keep on taking into mind the changes which are happening. You need to plan, coordinate, and control. So that's why you say a budget is a business parameter, right? How much you have done, what you need to do. So guys, out of these 11 points, 6 also you write. And if it's a 3 marker, you get marks here. Right. Yes, Ayush. Anushka, what is the chapter, more practical or more theory? It is more theory, Anushka. But yes, you do get a 5 marker from the last part of this budgeting topic. I'll just come up here. Right. Good evening, ma'am. What is the difference between budget and standard? Okay. What is the difference between budget and standard? Now, when you say budget, right, it's a nice question asked by Mansha. I would like to answer. Mansha, you people did standard costing? I think in standard costing, you would have understood that standard is a relationship. Right? It's a relationship. And it is always for the actual output. Yes or no? Tell me. When you studied standard costing, that was the first thing which your teacher must have told you, that standard is nothing but a relationship, that if you do X units you produce, you'll be incurring so much of raw material. Like if I say, if I give you 2 kgs, you need to manufacture 1 unit. Yes. Now, if you have actually produced 1,000 units, so what should be the standard input you should use? You'll say, ma'am, for 1 unit, you require 2 kgs. So for 1,000 units, you should require 2,000 kgs. So standard is always for an actual. Now, how does the standard defined? The standard is defined when we are budgeting. When we are budgeting, that time we are defining the standards. But budget and standard are different. Why? Because let's say I may have decided, or I would have budgeted that I will be producing 1,500 units. So according to that, I would have decided my direct material will be 3,000 kgs. So that's a budget. That's a budget. Right? But actually you produced 1,000 units. So what is the standard? 2,000. Now, if you'll actually again remember your standard costing lecture, you'll remember that there is no difference between your standard and your budget for variable, right? When you are doing any variable variances like material or labor or variable overheads, you will be only comparing between two things, that is standard and actual. Why? Because the budgeted units does not play a picture, but the budget decided that, okay, what should be the standard if I produce 1 unit of XYZ, right? So what you actually produce, with that you'll say, okay, this is a standard I should have used, and this is what I've actually used. So you would never be hearing the word budget when you're doing material, labor, and variable, right? Because the difference is not there. But you will actually see this difference when you're doing fixed overheads. Why? Because in fixed overheads, if my budgeted capacity was 10,000 units and I actually produced 8,000 units, then fixed overheads has got nothing to do with the production. That's a period cost. That does not vary with the production. If I said that budgeted units would be so and so, and this would be my budgeted overheads. That is why, if you remember the expense variance, in case of fixed overhead only, you will find your expense variance to be a difference between budgeted overhead and actual overhead. Otherwise, you do material, you do labor, you do variable overhead. Always the expense variance or rate variance or price variance was always the difference between the standard rate into actual minus actual into actual. Yes or no? This itself tells you that what is budget, what is standard. Yes. So this is it, right? So I think, Mancha, I've answered your question, right? I'm coming up to that, Shamim. Don't run. Mancha had asked me a question which was very, very relevant, because if you have done standard costing, you should understand this. But this is essential steps for preparing a budget. Guys, I have hardly seen Institute asking you such questions that you define, because we have so much to ask you. So we won't, but you should know that how does this process begin. So for starting up a budget, you should be first very clearly defined, and responsibility should be assigned to identifiable units within the organization. Your structure should be identified. You should have objectives and reasonable targets. And these targets need to be communicated to the right person. And then you start preparing for the future. So just read it, guys. Right? Okay. Then they have started telling you that, okay, budgeting, the process, directing, controlling. Okay. Now, budgetary control. Look at it. It is a system of management, control, and accounting in which all operations are forecasted and planned in advance to the extent possible, with the actual results compared with the forecasted and planned results. This is what I'm telling you again and again. That why are we budgeting? We are budgeting because we are forecasting this is what we need to do, this is what is our plan, and how much we have been able to achieve. And that's why standard costing was talking. So standard costing helps you see the difference between budget and standard would be the difference between actual results and standardly will give you the variances that, okay, we talk about efficiency. That, okay, if I should have taken up 100 hours for doing this work and I've done it only 90 hours, you say, oh, man, this guy is efficient. But that's talking about efficiency. That's what standard costing teaches you. But budgeting would be what? I decided that I should be producing 2,000 units. But if you produce only 1,000 units, what will you say? You will say, ma'am, you have not worked to the budgeted expectation. So standard costing is actually giving you the variances, right? At each level, talking about your efficiency, talking about your expense. Budgeting, on the other hand, tells you that, okay, this was my plan. I wanted to produce so many units. I wanted to have this much of profit. How much did we actually achieve? Right? So this helps me, to understand that, and it's a continuous comparison of actual and budgets, which helps us to know that did we budget keeping things to be very, very, keeping our attitude to be too much positive that, okay, this will happen. So every time we budget and then we compare it with actual, then it gives us a real life scenario that, oh, did we budget too less or did we budget too high? So that we can correct ourselves and, make more achievable and more realistic targets to achieve. This is it. Okay. Yes, ma'am, absolutely right. Only when we calculate fixed overhead, budgeted costs come into picture. Right? So I hope now you're clear with the fundamentals that budget, standard, actual, three different things. You don't feel the difference in standard costing while doing material, labor, and variable overhead, because budgeting is a tool by which we actually fix the standards, right? And then when we do standard costing, we are trying to compare that, okay, this should have been done and how much is actually done. Budgeting is an activity wherein we had a plan of action. We said, okay, this much should have been produced, but we actually managed to do this much, right? So one comparison is between budget and actual, and then actual and standard. I hope I'm clear. Okay. So, coming down to this. Look at it. So much budget manual, so many things, right? This is it. Budget. You can make budget on the basis of your capacity. Somebody was asking me, ma'am, what is the difference between fixed budget and flexible budget? See, when you are making budget on the basis of capacity, that if I work at 50%, 60%, 70%, then when you're making it capacity-wise, and if you're fixed at 70%, you'll say fixed budget. But if you're like at 40 this month, 60 this month, 70 this month, you'll say flexible budget. If you make a budget on the basis of functions, right? Functions would be, we start from sales, production, purchase, and labor and expense. That will be known as function-wise budget, right? Look at it, sales, production, plant utilization. Each function is taken care of, right? You can have a master budget. You can have budget period-wise, long, short, or current. So this is what they are defining as far as the budget is concerned. How do we study budgeting? Right? Now, I will be more interested in doing a sum. Right? Let's look at this sum. Yeah. Till now, any problem, guys? Okay. Look at it. A factory which expects to operate for 7,000 hours. That means the factory is currently operating or plans to operate at 7,000. Currently operating is not doing. Expects to operate. That means it plans to operate at 7,000 hours. And which is equivalent to 70% level of activity. They have given you certain details. Variable expenses, semi-variable expenses, fixed expenses. The semi-variable expenses go up by 10% between 85 and 95% activity, and by 20% above 95% activity. So prepare a flexible budget for 80, 90, 100. Right? So let's not look at what ICAI has done. This is basics of costing. Okay? Let us try doing it. Right? So let's say 80%. 90%. I'll do only one, then we can see the rest. Now, variable expenses, if it is 1260 at 70%, so what it will be at 80%, you tell me? Can you calculate? So you can just do it like this. 1260. What will you do? 1260 divided by 70 into 80. Have to be 1440. Similarly, you can do 1260 divided by 70 into 90 because it is variable. So 1260 divided by 70 into 90, 1620. This is variable. Semi-variable, they say, it goes up by 10% between 85 and 95% activity. That means at 80% it will still remain 1200. But after 85, it should increase by 10%, yes. So that means this 1200 pay we'll have to add 10%. That means it should become 1320. Yes or no? And fixed expenses should not change at all. Yes or no? That means this is nothing but your check of your basics of your 11th of your costing first topic which you would have studied, wherein you would have understood the difference between fixed and variable. That's what it is. So if you understand, good enough. If you have a problem identifying variable fixed, then it will be a problem. What does master budget mean? Master budget would be talking about your master plan, that okay, this much profit I want to achieve. I will not go function wise. Number. I'll be like, okay, what is the profit I want to earn? So okay, this must be the sales. So that's a master budget, right? What difference between fixed? I didn't understand your question, Shikha. Yeah, we have to do 100% also. I didn't do it. At 100%, what will be the difference? You will calculate variable expenses at 70% so and so. What is that 100%? And then Ayush, semi-variable expenses will increase by how much? It will increase by 20% because anything above 90%, 95% activity, semi-variable is supposed to increase by that, right? Ma'am, what is the weightage of this particular unit? Budgetary. How do I tell you, Rahul? As I said, I repeatedly am saying, question number 1, you can have 5 marks of question. So out of 100 marks, if you are getting 5 marks, so 5% weightage to hai, Rahul. And galti se agar if you get to, you are made to make a cash budget or a production or sales budget, it may be as high as 12%. Baba, इतना कंसर्न ना होने के बजाय पढ़ने में इंटरेस्ट रखें, every one of you. Anyways, so I hope you are very clear, right? Okay. Now here, after making the budget, after making the total expenses, they have budgeted hours. Look at it. What was the budgeted hours? What was the budgeted hours? Here it was 7,000. So they divided this by 4260 divided by 7,000. You got out of it 0.61, 0.55. Obviously, as you reach up to the 100% capacity, as you can see, variable cost will move as per the units produced, but fixed cost do not move in the same ratio. So obviously, the cost per unit starts falling. So that is why at 100% capacity, look at it, your expense per hour has reduced. Right? So let's look at illustration 2. A department of X company attains sales of 6 lakhs at 80% of its normal capacity, right? They have given the expenses, right? Now they have said, prepare a flexible admin, selling and distribution cost budget operating at 90, 100 and 110% of the normal budget. Every one of you, please take out your notebooks and do it. Shivani, what is this? What is this? Look at it. Shivani, what is this? At 80%. Then if you do the same thing at 90%, if you do that same thing at 100%, what is it? Aren't you flexible? Aren't you changing? It's a flexible budget. 80% so and so. What will happen at 90%? What will happen at 100%? So, Shivani, what are you doing? Right? Fixed budget means I'm operating at 80. What is going to be the budget? Fixed budget. You keep on operating at okay. Changing that, okay, 90 to kya hoga, 100 to kya hoga, 110 hoga to kya. Everybody open up your notebooks and start doing it. Look at it. Right. At 80%, sales are 6 lakhs, right? They have given you costs, office salaries, general expenses, depreciation, rates and taxes. Now you guys need to be smart enough looking at the information which will be given. There is no information given here, right? The question comes to an end here, there's a solution here. That means the question is still here only. Now you people tell me which one is variable and which one is fixed. What do you think? Office salaries is going to be variable or fixed? Tell me. Then we will check our answer. By the time you are giving your answer, I will do it myself. Office salaries should be fixed because it is 90,000. Why will the salaries change? If my sales change, I would still be needing the same set of questions specifically. Depreciation also has got nothing to do. This should also be fixed. Rates and taxes should also be fixed. Right? Selling costs. Now see, this is variable, this is variable, this is variable, this is variable. Okay. Distribution costs. This is fixed. Again variable. So if I understand this correctly, how do I start making it? Sorry. How do I start making it? They are saying at 90%. At 90%, what will happen? Tell me, what will be the flexible budget, Shivani? Office salary should be 90,000. Okay, you ask me, ma'am, in illustration 1, semi-variables increased by 20%. How is that? Then look what the question gives us. Just a second, guys. Look. The question says, and by 20% above 95% capacity. So if you are at 100%, your semi-variable expenses will not increase by 10%, they'll increase by 20%. It's given in the question. Okay. Now, let me move to the next question. Okay. Okay, so I'll do it my way. 2% of sales. Now at 80%, if sales is 6 lakhs, yes or no? So at 90%, it will be how much? 6 lakhs divided by 80 into 90. Calculate and tell me. Calculate and tell me. 6 lakhs is for 80, then how much for 90? It is 6,75,000. Yes or no? General expenses, they say, is going to be 2% of sales. That means into 2%. 13,500. I don't have any information for depreciation. It is fixed. It should remain like that. This should remain like that. Yes or no? Salaries, it is 8% of sales. So again, what will you do? $54,000, 8% of this. Yes. 13,500. 1% of sales, 6,750. This should be 6,750. Yes or no? Are you getting what I'm trying to do? I'm just doing as per the information which is just given to me. See? Similarly, I can do for what they have done. At 80%, sales is so and so. So at 90%, how much will be the sale? At 100%, how much will be the sale? And 10%, how much will be the sales? Office salaries will remain fixed. More information is general expenses 2%. So this is fixed. This is fixed. Selling. In the month of January, they had planned for a production of 10,000 units. Going now, they normally produce 8,000. What is their budget plan? They want to produce 10,000 units. Yes? So into a sudden cancellation, they could only produce 6,000. Indirect manufacturing costs are carefully planned and monitored in the machine shop. And foreman of the shop is paid 10% of the savings as bonus. When in any month, the indirect manufacturing cost incurred is less than the budget production. So please just follow the English, right? Manish, rent is normally a fixed cost. But if the question says that it is going to be 1% of sales, what will you do? You will follow as per the question, no, Manish? So the question says this expenditure, as such, there may be a lot of things which practically, if more information was given, we could analyze it as fixed or variable. There was nothing given in the question, no, Manish? So the figures which were like 15,000 or 8750, which were just given, we will assume them to be fixed. All the others were say the question says they are a percentage of sales. So if they are a percentage of sales, we have to do it like that. I hope I've answered your question, Manish. Okay. The video is stopped. Okay. Now, okay. Okay, fair enough. Now, coming back to this question. Now look at it. Now, as I said, this is a beautiful question from examination. This is just telling you that the company normally produces 8,000 units. Look at it. They plan to produce 10,000, but something happened because of which they could produce only 6,000 units. They are giving bonuses to the foremen, right, of the 10% of the savings, right? So, in this particular situation, the question is just expecting the foreman has put in a claim that he should be paid a bonus of 88 rupees for the month of January. Work manager, however, wonders how anyone can claim a bonus when the company has lost a sizable contract. He has given us some figures. So do you agree with the work manager? Now look at a beautiful question, right? The work manager is being paid bonus if he saves money, right? What is the saving? If, as per the budgeted expenditure, he spends less than that, he should be given money. Now the foreman is saying, give me 88 rupees 50 paisa. But work manager says, no. We were supposed to produce 10,000 units. We have not been able to produce 10,000. We could only produce 6,000. So when the company has lost so much, why should you get bonus? Actually, the claim of foreman, don't you think is wrong? Because that poor chap has no knowledge of this. His work is only that if budgeted is so and so, you incur less than that, I will give you bonus. That's a logic. So now it is that this foreman says I will be getting 88 rupees 50 paisa, then should he get 88 rupees 50 paisa? Right? Now look at it. Expenses for a normal month, planned for January, actual in January. Now what is very important here is, normal is as per 8,000. Planning was as per 10,000, but actually you work 6,000. So don't you think you should do everything first as per 6,000 compare? Now if you're going to compare with January, where you had decided to produce 10,000 units, normally you do 8,000 units, actually you did 6,000. Can you compare? You all have done standard costing. You tell me. Can you do it? Is it logical? No. Right? This salary of foreman happens to be fixed. So whether I have 10,000 units, whatever. But indirect labor, look at it. It is 720 when you produce 8,000 units. Then how much for 10,000? Yes, 720 divided by 8,000 into 10,000. That's why it came out to be 900, yes or no? But if you are going to compare this 900 with this actual 600, don't you think it will be wrong? Don't you think it will be wrong? Because this is as per 10,000 units of planning. If you have produced 6,000, don't you think we need to revise the budget? Don't you think we should make a revised budget here? And that revised budget should be as per what? 6,000 units. So according to that, this should be 1,000 only. This should be how much? This should be 720 divided by 8,000 into 6,000. This should be 540. But this gentleman only spent 600. He has spent more. He has not done any saving. Let's look at your indirect material. Yes, if for 8,000 it should be 800, Then 10,000, it should be 1,000. This is also variable. That means for 6,000, it should have been 600. Here also it is more. Right? They spent more. Repair and maintenance. 600 divided by 8,000. Then how much should be for 10,000? It should be 750. Yes. Now, this is not variable. Can you look at it? This is not variable. Because at 600 is for 8,000. If it was variable, then for 10,000, it should have been 750. Yes or no? But it is not 750. It is 650. That means this expenditure may be a stepped fixed cost or maybe a semi-variable cost. That is, after a particular level of production, if you produce more, the expenditure will be rising. Now, I don't have any information. But this much is very clear that if I'm producing lesser, definitely it could be 600 or lesser than 600. What I'm trying to emphasize is this is only flexed budget, means it is only your understanding of fixed and variable. Okay. Shikha, am I teaching master budget right now? No, no? Okay. Anyways, master budget means you're not talking on the basis of functions, you're talking about the organization as a whole, how much profit you need to earn. So you make a P&L account statement, you decide on the things which you need to do. That will be a master budget. Right? I'll come up to that. Manju, sorry ma'am, I have a small doubt in standard costing. May I ask? Mancha, you people put me in a small fix. Right? I have not taught you standard costing. Right. So technically, my answering your doubts of standard costing, I do not know whether it is correct or not. Okay, your doubt is related with formula or absorbed the standard overhead for computing fixed overhead variance. Mansha, why don't you people ask this doubt in your standard costing lecture? See, technically, I will see to it. I don't think there is any printing error as far as ICAI material is concerned of standard costing. Still, I will see to it and I will answer. Right? Yes, Manish. Repairs and maintenance appears out to be semi-variable or step fixed cost. But how do I find out? Right? Manish, that's a big problem. Okay. So, now let's see what ICAI has done. Look, salary of 4 men is fixed. So what they have done, expenses for a normal month, planned month, then expense for the flexible budget. Flexible budget is, this is for 8,000, this is for 10,000, then what should be for 6,000? And then you compare this 6,000 the expense with the actual. So you compare this budget with the actual, right? Indirect labor, it was variable. We did this. Indirect material, variable, we did this. Repair and maintenance, right? Now, semi-variable. Now, how did ICAI get this? 600 is for 8,000. And if at 10,000, it is 650. What did ICAI do? They tried to find out saying that this is semi-variable because it was not this. What did they do? Difference in expenditure is 50. Difference in units is 2,000. Difference between 10,000 and 8,000 is 2,000. Difference between expenses 50 rupees. So what did they do? 50 divided by 2,000. 0.025 should be variable. This is what they say. Okay, so if 0.025 is variable, 0.025 into 8,000 is how much? 200. Total cost is 600. So how much should be the fixed cost? 600 minus 200, 400. Let us check it out, whether it proves true for 10,000. 10,000 into 0.025, it comes out to be 250 plus 400. So total should be 650. Yes, it is correct. So can we do it for your 6,000 units? Yes, 6,000 into 0.025, and then you add up the 400. Yes, here you will get out with 150. So your answer will be 550. Yeah? Okay. Okay. Now with this, they have found out for power, for tools, for rates, everything. And they have come up that as per the budget, your expenditure should have been 4705. Your actuals is 4990. The above statement of flexible budget shows that the concerned expenses month of January have increased by 285 as compared to the flexible budget. Under such circumstances, assuming that the expenses are controllable and based on the financial perspective of the foreman, should not be entitled for any performance budget for the month of January. Why doesn't he get anything? Because we were giving him a 10% bonus only and only if he was expending lesser than the budget. Yes. So this is what they've done it. So basically when you say budgeting as a topic, kuch nahi hai. You should know how to segregate fixed and variable. You should know this concept that I cannot compare my actual performance of 6,000 units with my budgeted production of 10,000 units. I need to have a flexible budget. I need to have a flexi budget of 6,000 units and then compare in order to find out that whether the expenses which were controllable, right? Look at the logic behind flexible budget. If the expenses, see, fixed expenses are not controllable, right? So, but there are expenses, variable expenses, which are controlled. So, the intention of flexible budget is that, okay, we planned for 10,000, but we didn't make 10,000. But okay, we made 6,000. So, we should look into it that, okay, if 6,000 units we planned, then what should have been the expenditure and what we actually did, right? So, this is it. What is not clear, Shikha? Please, can you tell me what is not clear? This question. Can you tell me, Shikha, what is not clear? Okay. So, I hope everybody is very clear with the concept of flexible budget. Flexible budget means that if you are working at a capacity level of 50%, then what it would be if you're working at 60% and 70%, because in order to compare controllable costs, you need to make a flexible budget, as we did it in this case. Look at the lines and the English which ICAI has done. Under circumstances, assuming expenses are controllable and based on financial perspective of the foreman, he should not be entitled because we had promised him that if whatever is the budget, you expend less than that, you expense less than that, we will give you 10% bonus. Thank you, Anant. Shikha, semi-variable expense is not clear. Okay. Shikha, do you understand that repair and maintenance is semi-variable? It's like I'm taking up your lecture number 1. That is when we teach costing, the first thing we teach is the difference between fixed and variable. Thank you, Charu. Shikha, please pay attention. If I give you, there are 3 expenses here. Can you tell me which one is fixed and which one is variable and which one is semi-variable? First of all, Shikha, if I tell you I'm producing 1,000 units and I'm producing 2,000 units. Yes, Shikha? If I write the expenditure 10,000 and at 2,000 also it is 10,000. What is the nature of expenditure? Thank you, Sakshi. What is the nature of expenditure? Shikha, please can you answer me? I'm talking one-to-one to you now. What is the nature of the expenditure? It is fixed because it does not changes with the level of activity. It is fixed. It does not change with the level of activity. It is fixed. At 1,000 units also, I incur 10,000. At 2,000 units also, I incur 10,000. If I give you an expenditure that it is, 5,000 at 1,000 units, right? And if I tell you that it is 10,000 here, then what is the nature of the expenditure, Shikha? It is variable. Why? Because you can actually clearly understand that at 1,000 units, the expenditure is 5,000. That means per unit it will be 5 rupees. Yes or no? How did you calculate? 5,000 divided by 1,000 per unit is 5. Yes. That means that 2,000 units into 5 gives you 10,000. That means it is completely variable. Yes. I am asking Shikha, right? I don't want answers from anyone, one of you. Thank you, Rahul. Shikha, I want your answer, please. Right? Because if you say you're not clear with semi-variable expense, bacha, how will you handle a costing paper? You tell me. Right? Now, I hope everybody understand. The moment I see something like this is fixed. The moment I see something like this, I understand so. Now, if I tell you the expenditure is 4,000 and here it is 4,200. Now, looking at it only, you should be able to understand Shikha, you confused me. Shikha, which one is variable? This one is variable. This one is fixed. Now I can't see you. This is fixed, this is variable. Now look at here, Shikha. Here, this expenditure is definitely not fixed because at 1,000 units it is 4,000 and at 2,000 units it's 4,200. So it is definitely not fixed, but it is definitely not variable also. Why? Because if it was variable, then at 1,000 unit, if it is 4,000, that means at 2,000 units, the expenditure should have been 8,000. Yes or no? But it is not 8,000. That means this expenditure is semi-variable. So what do I do? How do I find out? Very simple. I take up the difference in expense and I take up the difference in units. Why do I do that? Because the difference in expense only comes because of variable cost. So the difference in units is 1,000. And difference in cost is 200. So what is the variable cost per unit? 200 divided by 1,000. Yes or no? It is 200 divided by 1,000. 0.2. Now once I know the variable cost, I can actually find out my fixed and the variable cost. Yes or no? I already know the variable cost. I can find out my fixed cost. How? See? At 1,000 units, your variable cost will be, total cost is 4,000. So your fixed cost will be 4,000 minus 2,000. So your fixed cost will be 2,000. Yes? Okay. Just a second. 1,000. Sorry. At 1,000 units, 0.2 is the variable cost. So your variable cost total is 200. So your total fixed cost will be total cost minus total variable cost, which is how much? 4,000 minus 200, which gives you 3,800. So let us check it out for 200 units, 2000 units. At 2000 units, your variable cost will be how much? 400. This is your total variable cost. In this, you will add up the total fixed cost, which you calculated 3800. This comes out to be 4200. Yes. Yes. So this is the way you bifurcate between fixed and variable. Yeah. Okay. This is something which you should have done in your first lectures of costing. Okay. Now, somebody wants illustration 3 to be repeated. Conclusion of 3 is, should he get the bonus? The answer is no. Budgeted expenditure should have been 4705. He has actually spent 4990. When was he supposed to get bonus? He was supposed to get bonus when in any month the indirect manufacturing cost is less than the budgeted cost. So is it less than the budgeted cost? No, it is in fact more than the budgeted cost. So that is why the person is not entitled for any kind of bonus. Okay guys, I never knew I'll end up spending so much of time in this variable and fixed and semi-variable. Oh, right. Now, functional budgets, as I said, you should start with your sales. Sales will tell the production, production will tell the purchase department, and all the functions in the organization. So your functions in the organization will be what? Sales, production, plant utilization, material, purchase, so many. Now, look at a sum here. Look at a sum here, right? I've given you each budget. I'll give you a break of 10 minutes. You can just go through these. And if you want to ask me any of these budgets, you can ask me. I will reiterate for you. Right, look at this. A single product company estimates quarter-wise for the next year. First quarter, they decided that okay, we'll be selling this much units, so and so, so. So sales department has given their budget. Opening stock of finished goods is 6,000 and company expects to maintain a closing stock of 12,250 units at the end of the year. Right? The production pattern each quarter is based on 80% of the sales of the current quarter and 20% of the sales of the next quarter. Right? Okay. The company maintains 20% of the sales of the next quarter as a closing stock of the current quarter. And they have given me further information. Now. Look at it. So this can be a question in the exam. Now this is not a difficult question, but this expects your understanding of your business. How? Let's go step by step. This is a sales department has given their plans that how much they want to produce. How much will be the finished good stock? That also they have given that okay. Beginning May, you need 6,000. End May, you need so and so. Now this is not end of a quarter. This is end of the year. Production pattern they have said 80% of the sales of the current quarter. That means if I want to decide on the production plan, it will be how much? It will be 80% of the sales of the current quarter. That means for this quarter, 80% 30,000 into 80%. So production would be 30,000 into 80%. That's what the question says. 24,000 plus 20% of the next quarter. So what is the next quarter? 37,500 into 20%. How much is it? 7,500. So how much it is? 24,000 plus 7,500, 31,500. So you require to produce in quarter one. How much do you need to produce? 31,500. Similarly, you can do for the next quarter. Similarly, you can do for the next quarter. So you'll know how much you need to produce. Yes? Okay. Okay, going further. Then they say the company maintains 20% sales of the next quarter as a closing stock. That means if I want to produce this much and I want to maintain the closing stock of the next, then how much do I need to produce? I need to produce at 31,500 plus 20% of the next quarter as closing stock, right? So it will be like 37,500 into 20%, 7,500 plus what we calculated would be the amount which I should produce, right? Then they have said opening stock of raw material at the beginning is 10,000 kgs. Closing stock at the end is required to be 5,000. Each unit of finished product requires 2 kgs of raw material. Now, in the first quarter, if I calculate that in the first quarter, how much did we calculate? I actually close it off. I redo it. I'll just do it for one quarter for you. So it was 24,000 plus 7,500, which was 31,500 I should produce, and plus I should have a closing stock. 20% of the sales of the next quarter. That means how much? 39,000. Now 39,000 units if I want to produce, and each unit requires 2 kgs. 2 kgs I think was written there. I can't move my computer down. That means I will have to have 78,000 of raw material to be used. Plus, how much of closing I need to keep, that is given in the question. You need to add up. How much opening you have, you can subtract. So you'll come to know how much you need to buy. Yes or no? Okay. Right. Now, they have also told us that how you're going to buy your requirement. They said, total raw material which you require, 30% I'll buy in the first, 50% in the second, third, and in the third quarter, I'll buy the balance 20%. Right? Now look at it. Look at it. How do you start doing yourself? First of all, since I did not have the closing for each quarter, first of all, they talked about the annual production. How did they do that? They said, what is the sales you need to do in all the 4 quarters? This is the sales I want to do in all the 4 quarters. What is the closing balance you want to keep? This much. How much opening balance you already have? This much. That means you come to know that how many you need to produce in the next year. Right? Then how will the product, now this is your annually how much you need to produce. Now look at the production budget. Production budget is, they were very clear, we will produce 80% of this, 20% of this. So look at it, how they meet. We'll make 20% of the next quarter. So how much is it? 24 plus 7,500, 31,500. This is which we made. So this is what you need to plan that, okay, this is the production I need to do. Similarly, you can do it for the next. And the total will come out to be 1,16,000. It has to come out to be 1,16,000. Yes or no? Okay. Then how much raw material you need? 31,500 into 2, this much raw material. What is now this raw material? They did it annually because again I did not have the closing of each quarter. I had the total. So what they did? How much is the raw material consumption in total? how much closing raw material you need to have, how much opening you have. You calculated, okay, this is the raw material I need to buy. Then this raw material, you divide it into 3 parts because they say you buy 30% here, 50% here, 20% here. Now, the biggest question is, you will be asking me, ma'am, what was this? The company maintains 20% sales of the next quarter as the closing of the current quarter. Right? The company maintains this 20% sales of next quarter. Now, what does this mean? What does this mean? Now, this is production pattern. What does this mean? This 20% was not considered anywhere. That means this is the amount of finished good you need to keep. Yes or no? You need to always keep finished good of this much. So this was actually an extension that when you're making a production pattern, in each quarter is based on 80% sales of the current quarter, 80% sales of. Now this was only a production pattern, right? So look at it. If you are making sales in the first quarter as 30,000, you were anyways producing 31,500. Then company has a policy that they want to keep a closing stock of 20% of the next quarter. Now this information ICAI has not used it at all. When you look at it, they have not used it. Nowhere they have used it till now. They calculated the whole year, then they said, okay, these are the sales. This total sales is 153,750, right? How much do you need to produce? They calculated, look at it, this total production turns out to be 160. How did they use this information here? 24 and 20% of the sales of the next quarter. Nowhere, how much do they need to maintain? Nowhere. They've used it. Now, is the question wrong? Is there anything wrong with the question? No, there is nothing wrong in the question. There's nothing wrong in the question. It's just that we need to understand that, okay, that was an extension of the information which was given. Right, okay. Ma'am, I don't think it will be 3,900. We can take 6,000 from the opening balance and then we'll produce 24,000. Wonderful, Ayush. Wonderful, Ayush. That's what I'm trying to tell you. Was that information useless or was it that we are not able to interpret, Ayush? Whole thing is we should understand that's an extension of the information which is given. That's an extension because if these are the units I need to produce, this is the opening and this is the closing. So if I know the total production of units I need to do, if you add further 20% of the quarter sales, this is the closing you want to maintain. Now this 20% closing has to be an extension which needs to be understood by you. That if 20% of next year was 37,500, 20% was 7,500, I already had an opening stock of 6,000. That means how much do I need to produce further? I need to produce only 1,500 more. Wonderful, Ayush. Right? This is it. Right? The question is absolutely correct. Right? But while we are doing a sum, we can do clerical errors. But look at it. This budgetary control, what is it expecting from you? It is just expecting you to understand that, okay, we start from the sales, then the production, then the purchase, you can make as many functional budgets as the information is given. You should just know how to interpret the English which is given there. Yes or no? Yes. So the sequence is, if here instead of giving closing stock of finished good at the end of the year, if they would have given us closing stock at the end of the quarter, right, which would have been 7,500, right, there was no need to do this yearly calculation also, right? But here they were giving you finished good at the end. So what did you do? You knew what are the total sales I need to do? What is the closing stock of finished good I need to keep? What is the opening stock of finished good I need to keep? So you came out with the information that, okay, these are the units I need to produce. This was a stepping stone which will make you understand that if at all you are taking up 39, you'll understand, oh, something is wrong, because my total units produced cannot be more than 160. And the moment you make your first quarter, things become easy. Your production in the first year happens to be 31,500. You will understand why you are maintaining a closing stock of 20% of the next. Yes, my next quarter, my sales happens to be 37,500. I am maintaining 20% of it as my closing stock. How? Because I have an opening stock of 6,000 with me. So though I need to make a sales of 30,000, I'm still producing 31,500. Why? Because I need to maintain a stock of 20% equivalent to the sale of the next month. Right? Which is 7,500. I have a balance of 6,000. So that means how many more I need to produce? Only 51. I hope I'm very sound and clear. Okay. Charu, ma'am, I think they have maintained 7,500 as closing and 24,000. No, Charu. That's what I'm trying to emphasize. Please, Charu, please try to understand. The question says, first line the question says is, production pattern is 80% of the current and 20% of the next year's sale. This is the information. Then comma or full stop. And then institute says, the company wants to maintain a balance of 20% of the next quarter's sale. This is what they are doing. So what is the student's tendency? The tendency of a student is that, okay, this is the production I need to do. And this much of closing stock I need to maintain. If you do that, your number of units produced will be how much? 31,500 plus 7,500, which will become 39,000. But please look into the question. They are very clear. You are making a sale of 30,000 in the first quarter. But for making a sale of 30,000 in the first quarter, you don't need to produce goods equivalent to 30,000. You need to produce some more. Why? Because I need to maintain a balance of 20% of the next year's sale. So my next quarter's sale was 37,500. So 27,500 of this is 7,500. So if I want to make a sale of 30,000, let me write it here. What you should have done, if I want to make a sale of 30,000 and I want to maintain a closing stock of 7,500, I should produce how many units? 37,500. But I already have an opening stock of 6,000. That means how much should I produce in quarter one? 31,500. This is the way you can cross check and see, yes. How do you produce those 31,500? Current quarter ka you take 80%, next quarter ka you take 7,500. So 31,500. Similarly, for the current quarter, you take 80% for the next quarter. Right? And I think then you can actually proceed. Renuka, it is not end of the quarter. Renuka, it is very clear. It is end of the year, Renuka. Look at the English. Closing balance. This is sale of all the 4 quarters. And this is at the end of the year. So what do? I take up, this is the sales of the whole year. This is the closing stock I want to maintain at the end of the year. This is the opening I want to maintain at the beginning of the year. So I get out with how many units I need to produce. I hope I'm clear. Okay. So these are the functional budgets which ICAI expects you to do it, right? And make it, right? Now, a cash budget. I explained you that why cash budget is important, right? We'll take a break of 10 minutes and then I will tell you about the cash budget, right? And somebody was asking me master budget, so I want to tell that person. Summary budget incorporating functional budgets approved, adopted and employed. Look at it. Budgeted income statement. That's what I was telling you again and again. How much profit you want to earn. That's a master budget. What is the balance sheet you want to appear as? That's a master budget. Right? Here you're not making budgets, functional budgets. You're like, this is what I want to do. This is the amount of profit I want to earn at the end of the year. Right? So we'll take a break for 10 minutes. And then we'll talk about cash budget and some ratios. Yeah. Thank you so much. See you in 10 minutes. Okay. Okay, I was just looking at the question which Mansha, you have asked me, practical question number 4, page number 15.7. Right, so this is which page number? Is this the page number you're talking about? Right, if yes, I can actually look into, right, 15 point, question number 4, no, this is, yeah. Is this the question you're asking me? If you please tell me. Now, a new study material, is this question variable cost per unit changes? Why is it so? I will just look into it. See, first of all, let me answer your question, Mansha. Why can a variable cost per unit change? Have you read economics wherein you have understood the concept of, that you have reached that optimum efficiency, right? We used to always teach that example that, okay, you have one more unit of labor, the efficiency will increase, the cost will be so and so, and till the time we reach that optimum, after that the variable cost becomes constant per unit and it changes, right? So yes, variable cost can change, right, if the person is not working at its optimum capacity. So it is like that. If I am working along with 4 more people, and each one of us is producing 100 units, so we 5 people put together, we are producing 500 units. But there is a scope that if we have one more person, then individually our capacity of producing a thing can become, instead of 100, it can become 120. And if that happens, the cost of producing 1 unit will fall, na Mansha? So that's the logic that why variable cost can change. Variable cost can change only in one situation, if we are not at our optimum. So that we'll have to read as per the question. So that's economics of grade 11 and 12. Right. Now let me look at this question. ABC is currently operating at 75% of its capacity. In the past 2 years, the level of operations are 55 and 65% respectively. Presently, the production is 75,000 units. So that means at 75% capacity, you produce 75,000. That means at 55%, it will be 55,000. At 65%, it will be 65,000 and so and so. The company wants to go up to 85%. They have given me 11 lakh, right, at 65% so and so, 75%, 15 lakh. Let me check, is it changing? Let me check it out. Okay. Okay. So 11 lakh divided by 55,000 units. So that means per unit cost should be 20. So at 65%, it should be 65,000 units. So into 65,000, it comes out to be 13 lakh. And at 75%, it is 75,000 units into 20. It is 15 lakh, dear. Let me check it out for direct labor. 5,50,000 divided by 55,000 units is 10 rupees per unit. So at 65,000, it should be 6,50,000. It's the same, dear. So the variable cost per unit is not changing. Let me look at factory overheads. Factory overheads are definitely semi-variable. Selling overheads are again semi-variable. Admin overheads are fixed. Hey, Mansha, how do you say that variable cost per unit is changing? It's not changing. The profit, at least in the question, because that kind of a concept, if ICAI gives you, they need to give you some information. Profit is estimated to be 20% on sales. Following is the increase in cost. Okay, this you're talking about. Now, this increase in cost, Mansha, can happen for various reasons. It can happen because of inflation. This can happen because of, the laws or anything. right? So please look at it. Here it is fixed. Here variable cost is 20 rupees per unit. Here it is 10 rupees per unit. These are variable costs. But here they are saying that this is what is going to be the change. So direct material will change by 8%. That means instead of being 20 rupees per unit, it will increase by 8%. Similarly, labor will increase. So guys, what do you need to do? ICAI is expecting, let me do it for you. I'll not do the whole sum for you. Otherwise, we can't do it. We just have today's lecture with ourselves. 20 per unit. Here it was 10 rupees per unit. This I'll have to bifurcate. So, difference, this was 55,000 units. This was 65,000 units. The difference in cost is how much? 20,000. 330 minus 310. Difference in units is 10,000. So variable cost is 2 rupees per unit. So can we find out the fixed cost? So it will be at 55,000 into 2, 1,10,000 is your variable cost. So your fixed would be 3,10,000 minus 1,10,000. So it will be 2 lakh. Yes, we can check it out. For 65,000 units, it should be 65,000 into 2 is 1,30,000 plus 2 lakh. This is it. Okay. Now I'm rubbing my board, please. So variable factory overheads will increase 5%. So it was how much? It was 2 rupees per unit. It will increase by 5%. Similarly, I can do it for selling overheads. I can find out how much is variable, how much is fixed. And then I can make it at 85%. Yes or no? Right. Right. So Mancha, the change here from 20 to 21 rupees 60 paisa can happen. No, because first of all, the question is giving that these are the changes. Biggest change can happen because of inflation. Can't it happen? If I was earlier paying 20 rupees, I got this kurta stitched for like, say, 600 rupees, let's say 2 years back. Abhi, if I get the same kurta stitched, I'm asked to pay 800 rupees. It's a variable cost. I get one kurta stitched, 600, two kurta stitched, 1200. But there's an inflation. So now instead of 600, I end up paying 800. Right? Why do you say abnormal factors? Right? COVID is one reason why which is abnormal, but otherwise inflation can be a reason. Change in laws, you have to pay this much only. Material cost has become expensive, which could be because of import-export provisions. It could be, non-availability of a material. Various reasons, Pancha. Yeah? Okay. So, I go back to something which I had been telling. So, I think you guys can solve it. Now, cash budget. You are being taught cash budget in FM, right? So technically, we don't ask you cash budget as far as costing paper is concerned. We are only expecting you to know what is a cash budget, right? What is the objective of making a cash budget, which I told you at the beginning itself, right? Now, master budget, right? As I said, what do you foresee as? Not in terms of functional budgets. You're foreseeing that, okay, what is the profit which you foresee to earn? What is the capacity at which you want to work? What is the assets or the balance sheet should look at? That's a master budget. So let's look at this question. They have a budgeted income statement. They've given us some information. They have the budgeted balance sheet, right? Now this is just to tell us that what a master budget looks like, right? So there's an illustration. Float glass manufacturing company requires you to prepare the master budget for the next year. Sales are so and so, bent glass sales are so and so, some expenditure. Now, what am I supposed to do? Don't you think I'm just supposed to make a profit and loss statement? Nothing else. So, master budget would be appearing out to be how much? Sales, toughened glass and bent glass, 8 lakhs, total sales. What will be the cost of production? Look at here. Direct material cost is 60% of sales. Direct wages is 20 workers at the rate of 150 per month. What are you supposed to do? See, cost of production is direct material, 60% of the sales. Direct wages, 20 workers into 150 into 12, prime cost. Don't you think you're making a cost sheet? Put up the factory cost, variable fixed, find out the profit. So I hope everybody is understanding what a master budget is. So till now, if I actually put things together for our understanding, budgeting is a plan, right? You can prepare budget as per your capacity, right? You can prepare it for a fixed, okay, I want to operate at 60%, what is going to be the plan? Or I want to produce 20,000 units, what is going to be the budget? That's fixed. Or you can be flexible enough to understand that, okay, this is what I plan to, this is what I actually did. So what should be if I would have operated or if I would have budgeted to produce so much? Flexible. Right? We can make budgets as per the functional activities which are going inside the organization. As I said, a typical organization, a manufacturing organization, is nothing but, talking about starting from sales to, you begin from sales. See, functional budget, if you want to start making a budget, you start from the sales. Why? Because once the sales team tells how much they want to sell, the production team decides how much they want to produce. And simple, production will depend upon how much you want to sell, plus closing stock minus one. This is what you want to produce. On the basis of production, purchase department. Again, purchase department, okay, these many units I need to purchase for producing this much, plus the closing minus the opening. Same you can do it for the material. Same you can go in for capacity utilization plant. And okay, I'm working at 50%. What if I work at 60%? You can make various functional budgets, right? Then comes your master budget. Now, master budget is nothing but making a cost sheet. As I said, making a profit and loss account statement. That's a budget, right? In order to tell you that, okay, how much profit do I plan to earn? Yes. And friends, something which is very important for me, because I can't end my session without this. Not zero-based budgeting comes as a theory. You should learn from here. It is defined as a method of budgeting which requires each element to be specifically justified. This line should be there if I'm asking you a definition of zero-based budgeting. As I said, if I was operating in a particular manner before COVID, right, I really can't do in the same fashion now. Why? Things have changed, scenarios have changed. So if there's an expenditure happening, I should look into the fact that, okay, if this is in the budget, is it supposed to be like that? Was the expenditure supposed to be incurred like that? I need to understand that. I hope you are very sound and clear. Right? Now, the thing here is that they are saying every expenditure that you do, you need to justify. It differs from conventional system because it starts from scratch or zero, or not on the basis of trend. So look at it. What are the lines I'm looking for? Each cost element needs to be justified. You start from scratch. Look at the second point. Zero-based budgeting starts from the premise that budgets for the next 2 years is zero so long as the demand for a function, process, project or activity is not justified for each rupee from the first rupee spent. That is, they're not assuming or they're not taking up that, okay, these are the sales or this had to be done. Or this. They're saying, okay, every rupee that you spend, justified. Okay, this expenditure will lead to this. So a functional budget is prepared as per functions, but here it is prepared for each activity, right? So here, in case of non-profit organizations like government bodies and local bodies, not-for-profit, where they need to justify the benefit of expenditure, zero-based budgeting is something you need to keep in mind. Okay. You need to make, because in case of corporate entities, ZBB is best suited for discretionary costs like R&D or training programs, because there you need to justify that every rupee that you are spending, is it worth it? Do you need to spend it? So I said in a corporate entity where profit is the main intention, there you don't need to start from zero-based budgeting. Then you have, okay, these are the sales we are doing, this is the activity which we are doing, this is the way you don't need to do from zero-based budgeting. But in case of a non-corporate organizations wherein you need to justify your expenditures, you need to start from zero-based budgeting. Right? So zero-based budgeting from examination theory point of view is very, very important. Students just write, if we are asking them what is zero-based budgeting, they'll just write down zero-based budgeting means starting from scratch, negating all what was done in the past. Now, how many marks do I give you for, if I'm asking you a theory for 5 marks? You need to tell me what zero-based budgeting is, whether I can apply it to corporate bodies, whether I can apply it to profit-making bodies, or should I apply it to profit-making bodies? And if I can, then for what expenditure? Right? So guys, when you are actually answering a theory question, please remember CA Institute is not a grade 10th or 12th examination, wherein theory means you learn something and you just puke it out. When you say theory, that means if ICAI has asked you a question, Institute is expecting you to justify your answer, that if you say this is this, then why do you say this is this? So if you say zero-based budgeting means you are starting from scratch or zero, then you need to say why. Why? Because in this, we are justifying every expenditure which is happening. The cost of each activity has to be justified. ZBB is an activity-based budgeting system, which is not prepared for functional departments. It is made for each activity. The activities are prioritized, evaluated, right? And then we actually look into the fact that, okay, do I need to have a budget for this particular activity? They say ZBB is fine for both corporate and non-corporate entities. In case of non-corporate, it is very important. In case of corporate, it should be for discretionary expenses. Now, if your question is giving me these 4 points, I'll give you marks. Now, you don't have to memorize all this. You don't need to memorize this. Identify. If you give ICAI, you start from scratch. Why do you start from scratch? Because you need to justify its expenditure. Second, it is an activity-based method of budgeting. It is not based on historical system. It is not based on the functions done. It can be suited for both corporate or non-corporate entities. Non-corporate entities, it is more suited because they have to justify for each expenditure they're doing. But for corporate only, if they are discretionary expenses. Give me all these points, I give you full marks. But trust me, wish you people can see the copies and see when students say that ICAI is not giving marks. Please see what you people are writing. You're picking up notes from coaching classes, and no, not bad to go to coaching classes. Good, you should go. Right, if you've not understood anything. My question is, evaluate that this is a professional exam. Some people say budgeting is a theory topic. Leave it. Arey Baba, budgeting is a theory topic. See for your own self. If it was just a theory topic, it's almost like going to be 2 hours. Wherein we're talking about budgeting, we have solved sums, and see, you need to understand variable and fixed bifurcation. Some students don't even know that. So, when you say theory, you need to understand how you need to attempt theory. Fixed budget, what do you mean by a fixed budget? Okay, I'm going to work for this much of activity, this is the budget. That's a fixed budget. Flexi would be, you keep on changing with the activity, right? Okay, now, now guys, something which I'm really interested for examination purpose, that is budget ratio. Okay, Charu. For example, if I am talking about a project, right? Let's say I am ICI. I'm ICI right now. Imagine I'm the head of ICI, and we decide that okay, we need to have virtual classes for the students, right? Now, CA Institute is not a profit-making organization, right? We are not earning profits from it. We are basically an institute, which is the intention of it is, which is holding examinations. Students are writing examinations, becoming chartered accountants, and whatever the subscription fees is paid by the chartered accountants after becoming CAs, that is being used for the development of the institute itself, right? The aim of ICI is not to earn profits, right? Okay, Charu? I'm not taking up a government body, I'm not taking anybody, I'm taking up our own ICI itself, right? Now, I decided, okay, I want to have virtual classes for CA students. Now, you tell me, if there is a team of 20 people there, and I suggest that, okay, we need to have virtual classes, don't you think those 19 people will ask me, Anu madam, why do you think we should have virtual classes? What do you think would be the benefit of it? Why do you need to have a virtual class? How do you think students will join in? What is the benefit the students are going to get? Each and every, see, nobody is going to ask for the regular expenditure. Examination has to be taken up. So nobody is going to question. You need to follow the trend that, okay, if students give exams, these many students give exam, these many copies I need, these many examiners I need, the examiners need to be paid so and so, these many colleges need to be taken up, exams need to be held. Now, these are all regular expenses. You don't need to follow zero-based budgeting. This is the way we have been doing. We just need to consider the inflation and the changes and budget for the next year. That, okay, last year if 6 lakh students were there, this time 9 lakh students are there, we can go for that. But you are starting up a new activity, right? Which is discretionary. It is not mandatory for ICI to give you virtual classes. Yes, it is not mandatory for ICI, right? This was a discretionary step taken up that, okay, for the benefit of students, a lot of students do not have access to good faculties. How you people would have reached up to me? You tell me. None of you, or who is from Mumbai, I don't know. But you could not have studied from me, right? Somebody is today sitting in X place or Y place or Z place. ICI thought that, okay, no, let the student be sitting anywhere across the country or outside the country, but doing Indian CA. That student should have an access to the best of the resources, right? So this was a discretionary expense. So they must have expanded on the research and development, how we will do it. We will have to have an IT team. Well, that IT team was not have been existing earlier, no, before these virtual classes existed or started. You tell me, Chand. Now, when it was started, it has to be from zero. The activity needs to be justified, yes or no? The activity, the cost and the benefit has to be analyzed. That, okay, the purpose of it is students should be able to reach up to the best of the resources, should be able to understand the text, should be benefited. If that is happening, justified. So this is an activity-based budgeting. Now, this is not as per functions. Are you understanding? Now, I can take up an organization, that if it is a government organization, obviously every activity needs to be justified. So we will do zero-based budgeting only. For a corporate, now here it was ICI. It operates like a government organization only, wherein you need to justify all the activities because it is not for profit. But if it is a profit-making organization, then any activity which is of discretionary in nature, any expenditure, then you'll have to go in for a zero-based budget. I hope, Charu, I have tried to explain you by a very, very simple example which I just made, right? And I'm not ICI, but I just made an impromptu example to explain you that when do you apply zero-based budgeting? Thank you, Charu. I am interested in this. You have already done this in standard costing. Capacity ratio, standard capacity employed ratio, level of activity ratio, efficiency ratio, calendar ratio. I will explain you each one of these. efficiency. I think each one of you, when you are doing, whether it is fixed, whether it is variable, whether it was labor, every time, what were you guys doing? What were you guys doing? If I say it takes 2 hours to produce a good, right? To produce a good. And if 200 goods were produced, so what should have been the standard hours? You'll say, ma'am, 200 into 2. That means you should have taken up 400 hours, yes or no? But the actual hours spent is, let's say, 360. Now you tell me, isn't this gentleman who has done this work efficient? Yes. Because we should have spent 400 hours and this person actually managed to do it in some 360 hours. So what is the efficiency? You don't need to learn anything. It will be what? Standard hours divided by actual hours. Yes or no? Acha, kabhi agar exam mein man kare that you want to write actual divided by standard, think of it. Mathematically. 360 divided by 400 into 100 karoge, the efficiency will come less than 100. Now you understand that this gentleman is more than 100% efficient. So even if you forget the formula, you should understand, since the figure has to be more than 100%, the formula has to be standard hours divided by actual hours. Yes or no? Or if instead of here actual hours were 480. So you understand this gentleman is inefficient. So if you do 480 divided by 400, he'll turn out to be efficient. So please use your common sense. Use your common sense. Looking at a thing, you should be able to understand it is efficient or it is not efficient. Now I'm going to tell you something else. If I tell you, I don't give you hours, right? I tell you that goods produced, actually goods produced is 200. Should have been produced 180. What does this mean? Should have been produced. That means this is the standard output. And what is this? This is the actual output. So you know that in the hours which were given, you could have produced only 180 units, yes? Right? But you managed to produce 200 units. Very logical, you are efficient. So if you talk in terms of output, don't you think it should be actual output divided by standard output? Because then only you'll come to know that this person is efficient or not. Right. So guys, my intention of emphasizing this is, first of all, this is standard costing. It helps you understand efficiency. Second, it comes in the exam paper, question number 1. Not many times ICAI loves asking you these questions. No, they'll give you figures and they'll say what is the efficiency, what is the activity. Now next is, what is activity? Now I tell you something very simple. Somebody was telling me long time back, ma'am, can you please tell me about fixed overhead variance? So hear me. Somebody was wanting to hear from me. See, I don't remember the name of the girl. She kept on requesting me, but I was helpless because I wasn't teaching that topic. So if you're hearing me, girlie, then listen to me. This activity ratio, what do you mean by activity ratio? Technically, you can call it as volume ratio as far as standard costing goes, fixed overhead variance. What do you mean by activity? Right? What do you mean by capacity? Let's look at it. What do you mean by efficiency? Efficiency, for explaining this thing, let me put it like this. Say, for example, Ayush, I'm taking up your example. So let's say it takes 1 hour to do a sum. Right? It takes 1 hour to do a sum. Right? Now, Ayush did 10 sums. So technically, she should have taken up standard hours of how many? 10 hours. But he actually did it in 6 hours. Yes? Now please understand, each one of us, when we are doing CA, there is a problem with all of us. And what is that problem? Our parents, they don't understand what we are studying. Most of them, right? Because most of the parents are not CAs. And if there is a family in which one of the parent is a CA, the other is not a CA, again it's a problem, because see, the people have that mindset in their mind, that if you are doing CA, you should study for so many hours. The thing is very clear that there are 24 hours in a day. You need to sleep for 8 hours. You need to do other activities for some, going to class, this, that, blah, blah, blah. So 14 hours gone. So everybody has that belief that you should study for so and so. So, mothers have this funda of budgeted hours, that you have 14 hours in a day to study. Now, for us, Ayush is very good. Ayush is outstanding. Why? Because Ayush should have taken up 10 hours to do this work. But he did it in 6 hours. So if you ask from us as students and Ayush's colleagues, we'll say, oh, Ayush is a scholar, huh? He's very efficient. He's very nice. But if you ask Ayush's mom, he'll say, Ayush is the most useless guy. He's not studying only. What is Mama see? Mummy is always seeing that Ayush has got 14 hours in a day and he's only spending 6 hours. Now, Mummy doesn't understand efficiency. She just knows this boy has a capacity to study for like 14 hours, but he's only studying for 6 hours. So as per Mummy, he's being compared between actual and budget. And capacity-wise, Mummy is unhappy because Ayush is working at half of his capacity. So Mummy would always be, I wish he passes. I wish he passes. He doesn't work to his full. On the other hand, if we talk about, in terms of activity terms, you will say, oh, 14 hours were there. He managed to produce work equivalent to 10 hours. So, yes, 10 to 14, he has been able to, 14 hours, budgeted hours were available. He could produce work equivalent to 10 standard hours. No, that's not capacity. That's his activity ratio. That is, he could utilize how much percentage of the budgeted hours which was there. I hope I'm very clear. So, if you just try to look at each of these ratios, you'll just enjoy it. Right? Absolutely correct, Ayush. So, mummies are looking at the capacity. Friends or your colleagues are looking at your efficiency. And we, as ICAI, are looking at everything. We are looking at your activity ratio. We are looking at your efficiency, looking at everything. So activity ratio is standard to budget. Calendar, this is also very interesting. How? Baba, giving an exam in the month of November, I think is most difficult. You ask me why? Student was writing an exam in May. Nothing is there in May. No, it's no festivals technically. But the moment you talk about the November attempt, I still remember when I gave my CA exams. Diwali, Ganpati, Dandiya, you name a festival, from October it's only festivals and festivals. You don't feel like doing anything. You just feel like eating and sleeping and that's it. It is so difficult to keep yourself, at one place and sit back and study. Sometimes I feel the calendar ratio, people say, Arey, you had so much of time, and you're like, oh, 30 days in a week, but 2 days for Dandiya, 2 days for this, 2 days. Oh, we had only 20 working days available. It's a calendar ratio. Nobody understands that. But we as CA students definitely understand. There is a calendar ratio. So if you say in a month, the budgeted working days are 30. But for us, available working days, if it is 20, you say there's a calendar ratio. Yeah. I hope I make sense. Capacity, now standard capacity usage ratio would be with respect to budgeted hours. That is budgeted hours divided by maximal possible hours in that budgeted period. In that budgeted period, if I had 1,000 hours, but I still budget to produce 24 hours in a day, that's a maximum possible hours in a budgeted day. But you decided on a budgeted hours of 14 hours. So that's a standard capacity usage ratio. Actual capacity usage ratio would be your actual hours to your budgeted hours. That is 6 hours of Ayush, who is maximum possible working hours in a period is 24. That's your actual capacity usage ratio. Actual usage to budgeted, which mom is seeing, is 6 to 14. So can you understand the terms here? Standard capacity ratio, actual capacity usage ratio, actual capacity to budgeted ratio. Right? Mohammed, ma'am, Institute of ICAI at faculty teaching way is amazing, like conceptual clarity, analyzing and also visualize the concepts. So I am firstly thank you to ICAI and also thankful for all ICAI faculties for guiding me. Thank you so much, Shameen. I hope every ICAI faculty is reading this and ICAI is reading it. ICAI is there for the students. Remember this thing, ICAI is there to pass you. You need to write what ICAI is looking for. I'm not kidding. Some people believe जबरदस्ती फेल कर देते हैं. ऐसा कुछ नहीं होता. There is nothing like this as जबरदस्ती fail. Right? Now, look at this. Now, this I'm really interested in this kind of a stuff. Standard working hours are 8 hours per day or 5 days per week. So what is the standard working hours according to them? 40 hours, right? Thank you so much, Charu. Now, maximum capacity, 50 employees. Actually working, 40 employees. So if we actually look at the maximum hours I have is how much? 50 employees into 8 hours per day into 5. What is your actual? 40 people. Actual hours expected to be worked for 4 weeks is 6,400 hours. Here it was how much? What was the maximum? 50 into 8. 50 into 8 into 5. 50. Oh, I'm not writing it. 50 into 8 into 5 is some 2,000, right? Actual hours expected to be worked for 4 weeks is 40 into 8 into 5. Okay. Into 4. 6,400. How did this 6,400 come? 40 into 8 into 5. So per week is 1,600. So for 4 weeks, it is going to be 1,600 into 4. Standard hours expected would be 50 into 8 into 5 is 2,000 per week. So for 4 weeks, it is 8,000. So we are very clear with this. Actually, you have worked for 6,000 hours. Standard hours earned in the 4 weeks is 7,000 hours. The related period is 4 weeks. In this period, there was a 1 day special holiday due to national event. Now, due to national event, if it was a holiday, that means I never worked for 5 days. So that means I was supposed to work for 20 days, but I actually ended up working for 19 days. Now they've asked me to calculate all those issues, right? Look at the first issue, the efficiency. Which is simple. Standard hours are given to you. Actual hours are given to you. You are efficient. It was very clear. Right? I've said standard hours earned in this instance. So efficiency ratio is simple. Activity ratio will be what? The activity ratio is comparison of what? Actual hours expected to be worked. Yes, this was the, you can say the standard, and this is your actual, right? As per the 40 employees, what should be the time you should have taken up? Now, there were not 50 employees, but at least 40 employees if they were there. Each one should have worked for 8 hours, for 5 days a week. So we should have worked for 6,400. Now you'll be thinking that, ma'am, activity ratio is standard hours divided by budgeted hours. Yes. So standard hours are how many? Standard hours are how many? Look at it. Standard hours are so 7,000. But the budgeted hours are how many? You can't take it up as per 50 employees, no, because they were never existing. That's the maximum budgeted hours. This is the budgeted hours. The activity ratio. Calendar ratio, as I told you, we had 20 days, we worked only 19 days. Okay, next, standard capacity ratio, 6,400 divided by 8,000. Actual capacity would be 6,000 divided by 8,000. And this would be your actual is to budgeted. Yes. I hope I am very sound and clear. So guys, this is what was there from my side as far as budgeting as a topic is concerned. There's lots and lots of theory there. You should read it. If at all you have not followed anything, you can always put in a mail for any of the topics which I have taken up. And I'll see if I can take up your doubts. As such, we've taken up all your doubts as and when we were taking up the questions. Now coming up, how you should manage your examination. Students who have still not started studying, if you're writing group 1 or you're writing group 2 or you're writing both the groups, guys, you have got now, technically speaking, some 40 days. Now, I assume you have already studied. You've already studied the text once. If not, try to take up 2 subjects in a day. Right? Not more than 2 subjects in a day. Do not try to just study. Try to solve the questions. Now, it doesn't mean that you need to solve all the questions. If you look at it, I was very clear what I want to tell you in budget. I was very clear I want to tell you what master budget looks like. I want to tell you what a functional budget looks like. I wanted to tell you what the problem lies when a student is interpreting a sum. I was very clear I want to tell you these ratios. So similarly, while you're doing a thing, you don't need to look into 100%. You need to look into that this is the area from which I need to study or I need to do it. And for that, please give yourself some hours and look at the past year trends. Obviously, you can't expect 100% will be like this. But you'll realize that repetitively, if there are things in the past 3 attempts, which is 4 attempts which are coming, you can understand the importance. Now, if you have understood that out of 12, 6 topics are coming only. Now, those 6 topics, if you will do it thorough, if all those 6 do not come, but 4 also come, still you manage to get those 50% of the paper. Right? Baki bhi cheezein you will study only. Next thing, guys, do not ignore theory for anything. Right? Again, I said theory does not mean learning and puking it out. It is nothing but your understanding of that particular subject. Right? So, rule number 1, each one of you should do the RTP, revisionary test paper, which ICAI issues. For the December attempt, there will be 1 RTP, and for the previous attempt, that is May attempt, there was an RTP. Please solve 2 RTPs. Please solve examination sums of at least 3 attempts. That's it. If you do not get the paper, you can always contact me. You'll realize after doing this, you also understand. You people always spend more of your time reading and doing the text. Now reading and doing the text is done. Now solve. So do past year's RTP, see how much you're reading. Second, do not look at the answer first. Am I very sound and clear? So 3 attempts, exam papers, 2 attempts RTP is a mandatory thing. That's all from my side. Activity ratio, Namrata. Activity ratio is nothing but comparing your standard with your budget. Right? Now, standard hours, they have told us that how many standard hours I created. It was 7,000 hours. What was the budgeted hours? The budgeted hours I can't take up as 8,000. No. My budgeted hours were, if there were 40 employees only available, then my budgeted hours were 40 employees into 8 hours a day into 5 days a week. It was 16 hours in a week, 4 weeks, 6,400. So activity ratio means comparing the standard with the budget. Yes. So any question? Durgesh, I like this session. Love you so much. Love you too, Durgesh. Charu, ma'am, at information will be given and we just have to calculate ratios in exam. Absolutely correct. Information will be given. Rahul, ma'am, your explanation is very clear. Thank you to guide us in this best manner. Thank you so much. So each one of you, jinka naam I was not able to take up, and jinka I could take up, Charu, Sakshi, Manish, Shamim, Mansha, Sushil, Rahul, Renuka, Shubham, Aryan, Vindhyoni, Sushil, Namrata, Shrisha, so many. Anushka, Namrata, so many names. Shivani, thank you so much. Shikha, I hope Shikha you have followed now as to how to divide. So a very happy Diwali from my side. Enjoy yourself. Hope to see you as my juniors in CA very soon. So a very goodbye from CA Anu Agarwal. Hoping to see all of you as CAs in the next 3 years. Thank you so much. Bye-bye. Yes. Thank you, Ramji. Thank you. आपको भी happy Diwali.